provision for bad and doubtful debts. And in this module, we will focus on increase in the balance of provision for doubtful debts. Okay, so let's see. This is an example, a practice question where we are in year 2 now. So since we are in year 2, the credit sales in this year 2, this would be continuity of the example that we discussed in the previous module. Okay, we'll take opening balances from there. So credit sale in this year 2 is 200,000. Receipts from customer are 185,000 during the year 2. And bad debts written off during the year are 8,000. Remember, bad debts written off already and bad debts to be written off is different thing. Okay, keep this in your mind. And the allowance for doubtful debts, here we are using the word allowance because it is also used in the books of accounts that you study. Allowance for doubtful debt or provision for doubtful debt or allowance for irrecoverables or provision for irrecoverables is the same thing. So allowance for doubtful debt is to be increased from 2,000 to 6,000. You remember in the previous module, we had a provision equal to 2,000. Now that has to be increased to 6,000. Here again, we are not talking about the complexities of the calculation, that what percentage should be, how this should be calculated, as we have discussed already, age debt analysis and specific and general provision thing. So just for the sake of ease, once we have calculated the amount, experts have told us that this much should be the percentage of the provision or the doubtful debts. We have calculated, we have measured that. So measurement is saying that provision should be equal to 6,000 against the closing balance of debtors. What we had in the opening balance of our provision account, 2,000. Let's see how it works. So we have debtors balance of 70,000 as brought forward with us, and sales during the year are 200,000. We have received, just see, we have received 185,000. We have received 185,000, and bad debts already written off is 8,000. Bad debts already written off are 8,000. So by simple balancing of the ledger account, it will give us 77,000 balance carry forward for the debtors. Well, so for the bad debts, what we see that this arrow is coming down in the bad debts account, 8,000. And come over here. Balance brought forward 2,000, and it was set, just see that it should be increased from 2,000 to 6,000. So here we go, 6,000. Okay. So when we are saying 6,000, so we have to increase this with 4,000 to make it equal to 6,000. So this 4,000 increase in provision for doubtful debt will be debited to the bad debts account, so that the total of bad debt 12,000 will be close to the income statement. So what we see that this 12,000 is coming in the income statement, and the debtors closing balance are coming here, 77,000, and provision, this closing balance, carry forward balance of 6,000 is coming here as 6,000, so that the net balance receivable from debtors appearing in the balance sheet or statement of financial position equal to 71,000. Okay, and income statement is showing, or the profit and loss account is showing bad debts expense equal to 12,000. And these are the accounting entries for this, that bad debts debit and debtors credit. During the year we did this accounting entry, and provision for doubtful debt is being credited with 4,000, and bad debts account is being debited with 4,000. So the important tips to remember in this module are: provision carries credit nature. Okay? And it is contra to the asset. Remember this thing. Okay? It will help you. And then increase in credit should be credited. And the reciprocal effect is loss, which is the bad debt. Okay? Whenever there is increase in provision, since provision is credit in nature, if there is increase in that, should be credited. And its reciprocal effect should be debited to bad debts account. So these are the tips in this module to remember. Thank you.